JP Morgan goes underweight on Bharti Airtel, cuts target to 710 rupees from 860 rupees on the back of higher than expected capex and lack of monetization of 5G services. Stock lower by about 3%.
Adani Wilmar projects a high single-digit revenue growth in Q3. Food and FMCG volumes grow by 20%. The company also says that it saw broad-based growth in urban as well as rural regions.
A JP Morgan note says more steel price hikes are expected, with demand from China likely to improve after the Lunar New Year. Further adds domestic steel prices can rise up to 3,000 rupees per ton in the next 2 to 3 months.
Uttam Sugar doubles its ethanol production capacity to around 250,000 in the UP plant. The stock is up 4%.
Hello and welcome. You're watching us here on Chartbusters. We opened flat and from there we've seen a big move on the markets. The good part today is that the Nifty bank is leading the charge with a gain of almost 0.6%. And in just the last 15 odd minutes or so, we've seen an upsurge in all the IT stocks as well. I'm Mangla Malu. With me as always, Nigel D'Souza. Nigel, we have Aditya Agarwala with us for a quick technical check. Aditya, it's been a very yo-yo sort of market. One day up, one day down, one day up, one day down. No follow through or for both longs or shorts. But from the place where we are right now, if we sustain above these levels for a little more time, then all the call writers may go to cover their positions. So do you think to that extent it makes sense to take a long trade, or maybe just stay away, or perhaps take a short trade as well?
Hi Mangla, hi Nigel. Good morning everybody and good morning to all the viewers. Oh, absolutely. It's been that kind of a market, especially after the new year, that it's difficult to take a trade, to be honest. On the downside, 17,800 is acting as an immediate support. On the upside, 18,200 is acting as a major hurdle. The moment you feel like markets have broken out and it's headed higher, it makes a U-turn and then reverses. Same happened in today morning. I would avoid trading the index, to be very honest. Unless you are a compulsive index trader, you should avoid getting into the markets at the moment. If somebody has to take a trade, then I would go for a long trade because the internals of the chart suggest that a short covering rally is due in the market. And from yesterday's low, there was a decent pullback that we've seen in the morning. So keeping a stop loss closer to about today's low, which is 17,800 or maybe 850 on the downside, one can expect a short covering rally at least the levels of 18,100 on the upside. So you have a good 100-150 point left on the upside on the Nifty. Same holds true for Bank Nifty as well, Manglam. On the upside, maybe 42,500, 42,600 is something I'm eyeing. On the downside, 42,100 is the immediate support zone. So I believe both Nifty and Bank Nifty have more room on the upside, and a short covering can be coming, at least for the day.
Aditya, that intraday dip that you got at the start of trade was actually a blessing in disguise. Because for the bulls, given that we did see a lot of selling yesterday, and the positioning was net short, well, we have bounced 150 points on the Nifty itself, and you believe that it's good for more. What about individual stocks? What are you tracking?
Absolutely, Nigel. So if we take a look at the sectoral moves, IT is something which is bouncing back, and I believe IT has found its foot and it's inching higher, closer to more upside on left on the upside. So a persistent system is something which is looking attractive at current levels. It has outperformed the entire pack. On the upside, can test levels of 4,200, so a fresh long position can be taken here with a stop loss at 39.40 on the downside. The second stock recommendation is HDFC Life. This entire space has also been buzzing around for quite some time, and yesterday's correction was again a blessing in disguise for traders to look at long position. On the upside, 625 can be a target. Fresh long positions can be taken here with a stop loss at 595 on the downside.
Okay, all right. Thanks a lot for that, Aditya. Well, let's just focus to our special segment where we get you a few ideas for profit from Money Control Pro. Sachin Pal of moneycontrol.com joins us to talk about a stock that is tracking closely. Sachin?
The company that I'll be talking about in our ideas for profit today is V-Guard Industries, which is one of the leading players in the consumer durable space. The company actually started from a single flagship product, which is voltage stabilizers, and since then has established its presence on a pan-India basis by diversifying its product portfolio, and has delivered a revenue growth of almost 14% over the past decade. The revenue growth over the last quarter, however, was rather lackluster, primarily due to the input cost pressures which the company has been facing. However, that seems to be reversing, and the company is confident of being able to achieve margins of around 9 to 11% over medium-term perspective. From a strategic standpoint, the company has also announced an acquisition of Sunflame Appliances to bolster its presence in the consumer appliances market, which remains the fastest growing category in the consumer durables market. Along with that, the company is also looking to diversify its presence away from the south markets and aggressive expansion in the non-southern markets. Over the long-term perspective, we remain confident of the management ability to be able to execute and gain more market share across the non-season regions and achieve revenue growth almost 10 to 12%. Well, at around 34 times FY24 estimated earnings, V-Guard enjoys a very strong market position, and investors can therefore look forward to opening with the stock at current levels.
All right, thanks a lot for that, Sachin. Before we go into a short break, just keep an eye out on a couple of these oil marketing companies. All of them have surged, moved to the high point of trade. IOC, BPCL, as well as HPCL, they're the ones which are picking up some steam right now. With that, take a short break, come back on the other side. We get you all the updates from the Auto Expo 2023. Stay tuned.
Welcome back. The Nifty holding well in the green with a gain of close to around 50 points odd. Well, moving on then. India's premier motor show, that's the Auto Expo 2023, is currently underway. My colleague Danish is attending the expo and joining us to tell us about the new launches and all that's happening there. Danish.
Well, the Auto Expo is back after a long gap of 3 years, and earlier in the morning we saw Maruti Suzuki kicking off things by unveiling their electric concept SUV called the EVX. Well, if things go according to the plan, then we can see the EVX running on Indian roads by the year 2025. But later on, we saw that even MG Motor unveiled its pricing of the facelift of MG Hector. Besides that, MG Motor also showcased at least 5 to 6 new electric vehicles that are there in this table, and the kind of EVs that they showcased us covered from PHEVs to proper battery cars, and then we moved on to Grease Cotton, and well, today Grease Cotton has also announced its foray into electric vehicles, and they unveiled at least 3 electric two-wheelers. So some of them are focused only on consumers, and one particular EV is focused on the B2B segment. Moreover, Grease Cotton has also showcased 3 electric three-wheelers which are there for passengers as well as for cargo. But the Auto Expo is not all about electric two-wheelers or about electric cars. We also saw that Ashok Leyland has also is also showcasing at least 6 to 7 different vehicles, and in their trucks and in their buses, the company is testing new technologies, which includes fuel cell, LNG, green hydrogen. So as of now, these are the major updates from the Auto Expo. We have one long day ahead of us, and tomorrow as well we'll see a host of new launches and a host of new announcements that the companies will make.
All right, Danish, thanks a lot for that. So that's about the Auto Expo. We will keep getting you updates from there as and when we do get the unveilings, etc., and some conversations from the Auto Expo, which is currently underway in Delhi, Expo 2023, that is. But let's move on. And we were talking about how oil marketing companies are doing well, right? Sources tell us that, they are hoping for a 50,000 crore rupee coming in as cash compensation from the government to make up for losses after the fuel prices were frozen. Sapna joins in with all the exclusive details. Sapna.
Well, industry players have estimated a cash compensation requirement of 50,000 crores from the government, as an immediate measure to help them make up for the losses that they've incurred on petrol and diesel in H1, Q3 also probably, and of course Q4 is ongoing. But 50,000 crores is their rough estimate in terms of the losses that they've incurred in terms of marketing of these products. That's one. The second viewpoint that's coming from OMCs very clearly is the fact that they just only can't manage to keep their head above the water and just be in a survival mode forever. Either the compensation should come through in terms of fiscal support from the government, cash fiscal support from the government, or they should be allowed to raise prices. For example, 2 to 3 rupees, price raise on diesel will help them go a long way. So these are the two demands, key takeaways from our conversations with OMCs at various points in time. This has been an important issue. It has been doing the rounds for quite some time. The government has compensated OMCs to around 22,000 crores for the LPG losses. Will they be willing to do the same for petrol and diesel losses also? That's a bit of a question mark. The matter is not closed yet, and we just have to keep a watch as to how much of this money actually comes through from the government coffers.
Okay, thanks a lot for that, Sapna. Well, time to slip into a short break. On the other side, we'll be joined with the management of Rico Auto. The stock is up in today's trading session. We'll understand how are they viewing business going ahead. Stay with us. Welcome back. Well, let's get straight to our corporate guest of the day. We have Arvind Kapoor, the Chairman and Managing Director of Rico Auto Industries, who's joining us on the show. Hi, Mr. Kapoor. Thanks so much for speaking to us here on CNBC-TV18. Well, as we speak, your stock is high with a gain of close to around 4 to around 5%, and there has been a steady up move in the last couple of months. So understanding the business prospects are going to be very important. Let's talk about your order book. What is the updated number? If you could tell us, how much is it? And also, how much of that order book is EV related?
Yeah, okay. So this year, our estimated turnover that we are expecting this year is about 2,350 crores, close to 2,400 crores, which would be a jump of almost about 25%. And in this calendar year, we have actually booked further orders for the future, which is to the tune of almost 1,400 crores. And out of which, almost between 75% plus minus 5% is what the electrification space is. So the focus is on the electric vehicles, and this year we should be crossing about 12% of our turnover would be the EVs, and we are adding almost 4 to 5% year on year, and soon we should be crossing almost 25 to 30%. That's what we are targeting.
That's interesting.
And we are waiting for a lot of new orders, which are Renault has just announced that they're going to be producing the electric vehicles in India for the world. And we are already supplying for the electrical vehicles. And so we are obviously the prime runners as far as the those vehicles are concerned.
That's interesting. 1,400 crore of your order book is, of which 75% plus minus 5% is EVs. And your revenue from EVs going forward is likely to be about 25 to 30%, with this year being about 12%. Last year was 7%. Why is it that the EV contribution to revenue is lower despite its higher contribution to the order book? That's point number one. And secondly, you did speak about orders coming in from Renault, there's BMW, Toyota. Also, a single source supplier to Toyota hybrid is what you are. What exactly is the potential revenue from these orders?
If you look at Toyota, BMW, and the total supplies that we do to them, Toyota would be around 200 crores a year, and BMW we will be crossing almost 350 to 400 crores a year, and that's what we are targeting. But the other electric vehicles would also be there. But let me clarify one thing here. We are not leaving the IC space, the engine space. That space is also growing. In fact, the demand for the vehicles is going up in the IC space also. So we are focusing, we are not leaving let go of any orders as far as the IC engine is concerned. So you'll find a growth taking place both in the electrical as well as the IC engine.
But then 75% of your order book is EVs, right? And you said that...
No, 75%, that is the future order book. That's
the fresh order.
Yeah, so fresh order.
What's your current order book, and can you give us the composition of that? Your total order book, not just future orders.
Today, this year we'll be crossing 2,400 crores, and out of which 12% would be the electrification, the electric vehicles.
2,400 crores of revenues. Okay, we got that. And also, you're saying that EV contribution will keep going up by close to 4 to 5% per annum. But you've not told us about margins. Now, last few quarters, you've been doing well, but margins have not yet broken into the double digits. Steady state, say for FY24, what kind of a revenue growth are you looking at from this base of around 2,400 crores? And steady state margins, will you break into double digits and hold out there?
Yeah, we did announce that. Next day, you'll see that we are doing the double digit space as far as the margins are concerned, and for the next year. And our growth for the next couple of years would be in the region of about 15% plus, I would say around 20% that we are looking to grow for the next couple of years.
50 and double digit, do you want to quantify that? Will it be 11%, 12%, 13%? What is it? Or you could give us a range as well.
We'll break that barrier of 10% very soon.
Okay, so you are not going beyond that 10%, saying that...
No, we are going beyond that, but I'm just giving you a commitment of plus 10%.
All right, okay, we take that point as it is. But you've also, increased your alloy wheels capacity from about 3.5 million units to 4.5 million units. What's the kind of capex that you anticipate, and incremental revenue from this would be how much?
We had already made the investments in the major equipment that was required to be actually at 5 million capacity. There are certain balancing equipment that would be required to be added, and that we will continue adding. We keep on adding as the orders come in, and we are hopeful of tying up with almost every two-wheeler in India, and also we're looking at the electrical space as well. The EVs, EV scooters, we'll be supplying to them as well.
So, what is the potential revenue from these 5 million wheels?
This year, I think we are crossing about 350 crores, and there would be an addition of about another 150 crores in that particular business.
Okay, all right. Also, you know, when I've seen when companies move from ICE to EV, the content per vehicle or the kit value goes up. So give us a sense. What is your kit value or your content per vehicle as of now? And where do you see that number headed?
See, it's very difficult to define that. What is the total kit value? I'll tell you the reason for that. Because if Maruti makes about 10 different types of vehicles, we would be in about 5 of them. And in 5 of them, in some cases, I would be 2%, in some cases, I would be 5%, in some cases, I would be 10%. So it depends on the requirement. In Kia, we are supplying the main engine blocks, those aluminum engine blocks. For Renault, we supply the engine blocks. So there, the content is also higher. It's almost 4,000 rupees a vehicle or 5,000 rupees a vehicle that we do supply. For Renault, it could be around 6,000 rupees a vehicle.
So on a blended basis, Mr. Kapoor, on a blended basis, say for 4-wheelers and 2-wheelers, could you give us a number and tell us, with the focus on EV, how much higher will that number go, if it's possible, a blended number?
The blended number is very difficult to define.
Okay. But safe to say that with your focus on EV, the content per vehicle will go up.
Oh yeah.
Certainly. By how much?
Now, if we talk of the BMW, and in BMW, we would be supplying the main components for the motor as well as the transmission. And for Toyota, if you look at it, we supply the main housings for the hybrid vehicles. And that's a major content. But if you define it with the total vehicle, then of course the percentage will be very low.
Right. So let's approach it in a different way. Say some of your most valued clients, the clients where you sell the most amount of products to as a proportion of their sales. How does that compare with your median clients? And what's the potential to which you can grow? That's the broad understanding that we're aiming at here.
Now, I'll give you a very broad outlook here.
Yes.
We'll be growing by about 15 to 20% year on year. This year, of course, we'll be crossing 25%. And if you look at the growth, that we are also adding newer customers, Norbrams, etc., etc. So that when my growth takes place, I'm also adding new customers as far as that's concerned. Then we are also adding on more components from the current OEMs. And if you look at Hero, it's almost 28% to 29% is what we supply to Hero of our total turnover.
Yes.
Okay.
Now, if I break it down to vehicle, it actually depends on the vehicle that we are really talking about.
Mr. Kapoor, the broad sense we're getting, it's quite complex, so you can't really put a number to it. But what you could tell us about is, we're going a little short on time, but what is your current debt in your books? I think your interest cost per quarter is 10-12 crores. So what is the debt on books? Point number 1. And also the stock has seen a big run, but I've noticed that there's no big institutional holding. Have institutions evicted some kind of interest in the company? Both these 2 points, debt and any interest coming from institutions.
They are in touch with us. We are discussing with them, and on a daily basis, you find more and more people getting interested, more institutions getting interested, and you'll find the percentage actually going up there.
All right, and the debt on your books?
The total debt is about 600 crores.
About 600 crores.
Working capital and everything.
All right, and finally, you also look at non-auto businesses. I mean, we see some potential for the electric fuses tender for the defense business. How much can that be in terms of revenue potential for you?
See, that I had mentioned earlier also that those fuses are for the defense, and that's a tender, and we participated in the tender, and the decision is yet to be made in that. And if that comes up, the total business is about 7,000 crores. Now they've removed some items after that. And so we are waiting for that. Let's see what happens. We are waiting for the results. And let's see what happens. Either they split it up amongst the various suppliers in India, or I don't think they'll give it to one person.
All right, Mr. Kapoor, thank you so much for joining in and giving us all those details. Wish you good luck for your future going ahead. That is Rico Auto. The stock has seen a big rally. Let's see what the company delivers going forward. With that, we wrap up on this edition of Chartbusters. Thank you for tuning in.